Yes, students. Now we will discuss the questions from ICI material on chapter 15. Come to ICI material. We'll start with multiple choice questions. If a company wishes to establish a factory overhead budget system in which estimated cost can be derived directly from the estimates of activity level, it should prepare dash master budget, cash budget, flexible budget, fixed budget. Which budget, guys? Flexible budget. Yes, sir. Means you can prepare the flexible budget at different activity level. The classification of fixed and variable cost is useful for the preparation of dash budget, flexible budget, guys. Again, because in flexible budget we will give a breakup of cost between fixed and variable. Even if it is semi-variable, we will try to break it down. How much is variable, how much is fixed. Next, budget manual is a document which contains different type of budget to be formulated only. No. Which contains the details about the standard cost of the product to be made? Only. No. It might be one of the things, but not completely. Next, setting out the budget organization and procedures for preparing the budget, including fixation of responsibilities, formats and records required for the purpose of preparing a budget and for exercising budgetary control system. Or none of the above. Answer is C, guys. The budget control organization is usually headed by a top executive who is known as general manager, budget director, or budget controller, accountant of an organization. None of the above. Budget director, budget controller, or we also call it as budget officer, guys. Yes, sir. A favorable budget variance is always an indication of efficient performance. Do you agree? Give reason. Guys, will it be always an efficient performance? May not be. See, majority of the time, yes. Majority of the time, yes. But can I tell it as always, sir? May not be. Let us see. A favorable variance indicates saving on the part of the organization. Hence, it indicates efficient performance of the organization. Yes, guys, this is the majority of the time which happens. But I am concerned about one word what they have used is always. Is always. So, will it be always, sir? Need not be. Yes. Under all the situation, a favorable variance of an organization speaks about its efficient performance. No, I cannot conclude that way also. A favorable variance does not necessarily indicate efficient performance because such a variance might have been arrived at by not carrying out the expenses mentioned in the budget. Yes, guys. This is the thing. Why is that? I repeat again, guys. See, most of the time when we get favorable variances, it is a good sign, it's a good performance. We have efficiently performed. But can I conclude that it will always be efficient performance? No. For example, assume guys, I had prepared a research and development budget. Budgeted cost is 10 lakh. I ended up incurring only 3 lakh. That means, sir, 7 lakh favorable. Good. I cannot tell why. What if I have not done whatever I was supposed to do? I have not done all the research which I was supposed to do. Budget was allocated for me 10 lakh, but I have done only on some minor research. I have incurred 3 lakh. Now I cannot tell I have saved 7 lakh. Clear? Same way, administrative work and distribution work or marketing work. Sir, we have allocated 10 lakh, 15 lakh, 30 lakh. But whatever was supposed to be done, it is not done, sir. So in that case, will actual be less than budgeted or standard? Yes, sir. So I cannot tell it is efficient. I cannot tell efficient. In another way also, assume guys material variance or labor variance also. So if it is a, for example, actual cost is less, sir. Fine, I have produced product by incurring very less cost. Low quality. I have used raw material which is cheap quality. Sir, cost full less, sir, but quality is not up to the standard. So is it efficient? No. Yes, favorable, sir. Variance wise favorable, but product wise, is it efficient? Have I performed well? No. Clear? Yes. Sure. Next. So the answer is C here. Fifth one. A budget report is prepared on the principle of exception and thus principle of exception means only focusing on what I couldn't achieve. For example, standard was 5 lakh, actual is 5 lakh. Will I focus on it? No, sir, variance is 0. My focus is only on what? Wherever there is a variance. Wherever there is a variance. Sir, only favorable or only adverse, sir. Both I will focus. Why, sir? If it is unfavorable, I will look into what went wrong. If it is favorable, I will appreciate the people because we have saved something. So you have to look into both. And thus, Only unfavorable variances should be shown? No. Only favorable variance should be shown? No. Both favorable and unfavorable variances should be shown? Yes. None of the above. None of the above, guys. Last one. Purchase budget and materials budget are same. Guys, is it same? No. Please be careful. Materials budget is prepared only for the raw materials. Materials. Whereas purchase budget, guys, normally we mean purchase means goods. But will purchase includes only goods, sir? Need not be. For example, printing a stationery. Items I have purchased. Is it also purchased? Yes, sir. It can include anything other than materials also. Whereas materials budget will include only materials. Purchase budget is a budget which includes only the details of material purchased. No. Purchase budget is a wider concept and thus includes not only purchases of materials, also other items as well. Is it correct? Yes, sir. Purchases budget is a wider concept and thus includes not only purchases of material but also other items. Coming to the other one. Purchase budget is different from material budget. It includes only purchase of other items. No. It will include material as well as other items. It includes material as well as other items. So the answer is B here. Efficiency ratio is the extent of actual working days avoided during the budgeted period. Okay. Is it, sir? No. Yes. So what is the formula first of all for efficiency ratio? Was let me write it. Standard hours divided by actual hours into 100. Please be careful. I am talking about ratio, not variance. Clear? If it was, sir, variance, then the formula would have been standard hours per actual output minus actual hours into standard rate per hour. Standard rate per hour. But here it is ratio gas. Have they given? Let us look into it. Extent of actual working days. No. Avoided during the budgeted period. No. Activity ratio divided by capacity ratio. I am a bit confused with it. Let us keep it on board. Whether the actual activity is more or less than the budgeted activity. No, this is not an activity ratio. None of the above. Guys, that means I have an option between now B or D. B and D. Correct? Yes, sir. Now, what is this activity ratio and capacity ratio? Sir, did we calculate this? Yes, we have a formula for it. Let us try to work out on that, guys. Let us try to work out on that. Let's just a second. I will clear all this. Yes. What are the two things given there options? Sir, activity divided by capacity. Activity ratio divided by capacity. Okay, activity is here, sir. What is the formula, sir? Standard hours divided by budgeted hours. Okay. Capacity. Guys, take where budgeted hours is used. Budgeted hours is used here. Let me take the actual hours divided by budgeted hours. Capacity ratio. What is the formula, sir? Actual hours divided by budgeted hours. Okay, the activity divided by capacity. Now, where do I do it? Here I will do. Listen, guys. Standard hours divided by budgeted hours. Whole divided by actual hours divided by budgeted hours. Correct? Yes. Now let me take this to the numerator. What it will become, guys? Ulta. Budgeted hours divided by actual hours. Correct? When numerator goes, denominator goes to the numerator, multiplier. It will be a multiplier. Now, can I cancel out BH? Numerator and denominator? Yes, sir. Now, what is the answer? SH divided by GH. Standard hours divided by actual hours. Guys, for efficiency ratio, what is the formula? Standard hours divided by actual hours. This kind of MCQs, sir, it is a theory question. In fact, actually, any theory question you have to answer in seconds. But will you be able to answer this in seconds? No. And guys, when you solve this kind of question, now your thinking level is like that. Next time, if they give similar kind of question, you will do it. But if you see it for the first time, you will be blank. Maybe most of them will go with none of the above. Clear? So answer is actually activity divided by capacity ratio, guys. Hope you understood how we solved it. Yes, sir. So the answer is activity ratio divided by capacity ratio now. Okay, let us move forward. Activity ratio depicts whether the actual capacity utilized exceeds or falls short of budgeted capacity. No, this is not capacity. Whether the actual hours used for actual production were more or less than the standard hours. No. whether actual activity, now we have come to the point, was more or less than budgeted capacity. It should have been the activity again, but still, whether actual activity was less or more or less than budgeted. Okay, let us see the last one. None of the above. So out of the given option, which is the answer? C. We are measuring the activity. Next, 10th one. Which of the following is usually a short-term budget? Capital expenditure budget? No, no. Research and development budget? Both of these are long-term. Then cash budget, sales budget. Guys, see, both are short-term only because sales budget we normally prepare for a year, but we can break down per month, per quarter and all. But cash budget, because any company will be reconciling their cash and bank balance every now and then. You would have learned the BRS. So they would have prepared the cash budget for a very short period. Yes, sir. Because they want to know what's the cash balance at the end of maybe every week, every month, or every 15 days. Okay, guys. Let us move to the practical problems. Question number one. B Limited manufactures two products, X and Y, and sells them through two divisions, East and West. Okay, maybe they are two different areas. Guys. For the purpose of sales budget to the budget committee, following information has been made available for the year 22-23. Budgeted sales they have given guys, actual sales they have given for both the divisions. Both the divisions they have two products. Please be careful. X and Y is their products, whereas these are the two geographical area where they are operating. Where they are operating. Yes, sir. They have given budgeted sales, guys, as well as actual sales. That means already the year has come to an end. When actual data is given, that means the year has already come to an end. Adequate market studies reveal that product X is popular but underpriced. It is expected that if the price is increased by 2 rupees, it will find a ready market. Okay. For product X, they want to increase the price itself. For how much, guys? 20 rupees. Increase by 2 rupees means presently 18. So increase it by 2, 20. Next, on the other hand, Y is overpriced, and if the price of Y is reduced by 2, it will have more demand in the market. So 42 will become now 40. New selling price. New selling price, guys. Okay. The company management has agreed for the offer side price changes. On the basis of this price changes and the reports of salesmen, following estimates have been prepared by the divisional managers. Maybe the estimation, projection. Percentage increase in sales over the budgeted sales. Whatever is the budgeted sales now, the units, how much it will increase they are giving. How much it will increase. Okay, how much, sir? East division, product X, 12.5%, Y, 22.5%. West division, product X, 7.5%, and Y, 12.5%. All increase in quantities, guys. Please be careful. Increase in quantities. Okay. With the help of intensive advertisement campaign, following additional sales over and above the above mentioned estimates, sales by divisional manager are possible. Means over and above this increase, if you do this advertisement campaign, still you can further increase it. By how much? East division X 120, Y 80. West division X 140 and Y 100. Okay, sir. You are required to prepare sales budget for 22-23 after incorporating the above estimates and also show the budgeted sales and actual sales of 21-22. Guys, something is missing here. So actually they are asking us to do budgeted for 22-23 and actual data has to be presented for 21-22. That means this is 21-22. Whatever actual data is given is for 21-22, guys. Budgeted as well as actual. Now, what are we supposed to do? Based on some changes they have given, we need to project or prepare the budget for what? 22-23, guys. Hope you understand. Please make that necessary change. Let us move to the solution. Guys, one thing. With respect to quantity, now budgeted quantity for the upcoming year will be how much? Listen here. I will give an example. 800 is present plus 12.5%. How much you get? Plus 120. Clear? Same way. For Y 600 plus 22.5% plus 80 units. Because this 8 is over and above the above increase. Clear? That too if you do some advertisement campaign and all. Then, please be careful. The increase and all is for on budgeted sales. 1200 plus 7.5% plus whatever you would have got plus 140. Same way. 1000 plus 12.5% plus 100 plus 100, guys. Oh, sure. That's all. I don't think anything else is tough here. Everything else is easy, just presentation now. Ah, they're shown here. Workings first. Guys, see, these are the budgeted sales. So clear? Yes. Now they have considered the percentage increase which was given above. Clear? Yes, sir. So into 112.5, that is 12.5% increase. Now they have done into 112.5. That then 7.5% is the increase now. So they have taken 107.5%. Or else can I simply add 7.5%, sir? Yes, you will get same. Then you add this another item which is given after that. 120, 140, 80 and 100 packs. So what is this? Budgeted quantity now. Budgeted quantity or sales quantity. Okay, sir. Whatever we have got, we have taken here, guys. 1020, 1430, 815, 1225. This is what we have taken. Understood now? These are the only things, guys. Rest is easy. And this 18 it was, now 2 rupees increase. So 20. And for product Y it was 42 minus 2. Minus 2. If you want, you better show. They are not shown there. Okay, you can show here. 18 plus 2. This is 42 minus 2. Got it up? Yes. So both are budgeted now. Sales budget multiply this. Quantity into rate is equal to amount. Quantity into rate is equal to amount. Now amount you add. Total also they have given for both put together. Clear? Yes. So this is the sales budget for 22-23. They also asked you to present the actual data along with the budgeted for the last year. For the last year. This is for the upcoming year. Now, statement showing sales budget for 21-22. Year they have written correctly. 21-22. Yes, sir. Sales budget, guys. Whatever figures they have given, no change. 800 into 8, 18, 1200 into 18. Yes, sir. Same way, 600 into 42, 1000 into 42. All these are copy paste of first table, whatever is given. Yes, sir. Actual sales also. Same to same. The second part you have to take in the first table. 1000 into 18, 1400 into 18. Then coming to this side. 400 into 42, 800 into 42. All the data copy paste of what was given in the first table, guys. Nothing special. Only thing which was important here was this working. Mark a star for that. That's all. Okay, and rate anyway, that is easy only. Okay. Yes, sure. We'll move forward. Yes. During the financial year 21-22, P Limited has produced 6,000 units operating at 50% capacity level. The cost structure at 50% level of the activities as under. Guys, as soon as you see this, what will strike to your mind? Flexible budget. Flexible budget. Yes, sir. So they are operating at 50% and they are producing how many units, guys? 60,000 units. Their cost structure at 50% is as follows. Direct material 300 rupees per unit, direct wages 100 rupees per unit, then variable overheads 100 rupees per unit, direct expenses 60 rupees per unit, factory expenses 25% fixed. That means 80 rupees per unit. How much is fixed portion you calculate? 20. So variable would be 60. Okay, sir. Selling and distribution expenses 80% variable 40 rupees. So fixed is 8 rupees. Variable is 32. Office and administration 100% fixed cash 20 rupees. Okay. And 20 rupees if I want to calculate total, what do I do? Fixed and all into 60,000 into 60,000 into 60,000. That's all fixed element is like that only. Yes. Correct, no, Rohit? The company anticipates that in financial year 22-23, the variable cost will go up by 20% and fixed cost will go up by 15%. Okay, both. Sir, fixed cost you have taught us now, it will not change. No, sir, here they are giving in the question, it will change. Please consider it. The selling price per unit will increase by 10% to 880. That means before how much it was? 800. Clear? They have not given it. We have to calculate. Sir, 880, hello, listen here. 880 is now 110%. So how much was 100%? 800. Previously it was 800. Now revised is 880. Required. Calculate the budgeted profit or loss for the year 21-22. Prepare an expense budget 21-22. Correct. Prepare an expense budget on marginal cost basis for the financial year 22-23, that is upcoming year, for the company at 50% and 60% level of activity, and find out the profits at respective levels. And actually, if they had asked for 21-22, it should not be budgeted. Actually, it should actual profit. It is actual. Budgeted is something which we always do it for future. And this has already happened, sir. This has already happened. For 20 to 23, we are projecting something. If they ask to calculate profit for 20 to 23, then it would be budgeted. Whereas for 21-22, I don't think the word should be used budgeted here. But still, whatever is given in the question, you also follow the same. Fine. Calculation of budgeted profit for the financial year 21-22 at 60,000 units level, guys. That is present level. At present level. Yeah, sure. What is the selling price? 800. They are not shown how did we derive it. If you want, you can show it as 880 is present divided by 110%. Why 110%, guys? After 10% increase, it is 880. After 10% increase, it is 880. So previously it was how much? 800. 800 we have sold how many units? 60,000 units. So it is 4 crore 80 lakh. Now coming to all cost take as it is. Don't consider any increase or decrease. Oh, this is for 21-22. Direct material 300, direct wages 100, variable overhead 100, direct expenses 60, variable factory 80 rupees, in that 75% 60, variable selling and distribution expenses 40, in that 80% is variable, that means 32. That means 32. All this multiply with 60,000 units. 60,000 units. You will get variable cost, total variable cost, in fact. Okay. Total variable cost we got per unit 652. Total is 3 crore 91 lakh 20,000. How much is the contribution, sir? Per unit 148, and overall it is 88 lakh 80,000. Do we have fixed cost? Yes, sir. Office and administration 100% fixed cost. Per unit how much? 20. 20 into 60,000. 12. Same way, fixed factory expenses. Fixed factory expenses. Here it is 60. That means here 20. 20 into again 60,000. Then fixed selling and distribution expenses is 32 here. That means 8 here. 8 into 60,000. Sir, why we have not presented anything in unit column? But because it will not be fixed cost. Still, we know no, sir, for this question. Can I present it? Yes, that's okay. No problem. You will write 2028. 2028. Guys, please be careful. Total is not given in the question. With what should you multiply? 60,000. What do you get? Total fixed cost. Okay, sir. Now, calculate the profit. Total fixed cost minus the contribution. Sorry, contribution minus fixed cost will give you profit. So, what is that budgeted profit or loss they have asked is 60 lakh. Actually, it is actual profit. Because already the year has come to an end. Whatever figures is available with me is actual figures, guys. Oh. Now, expense budget for 22-23, guys. At 50% and 60% level. What they have asked is 50% or 60% or both. Both they have asked. Oh. 50% we already have it. Correct? This is 50 only, right? This is 50% or 60%? 50%. Okay, sir. 50%. Now, can I copy paste the same figures? No, there are some increases. There are some increases. Even selling price has changed. Please consider them. Okay, first calculate the units. At 50%, how many units you have? 60,000. For 60%, how much it would be? 72,000. How, sir? 60,000 divided by 50 into 60. Into 60. Okay, sir. Selling price 880. Guys, they only given revised after 10% increase. Yes. So, now multiply. Selling price into number of units. You will get total sales. Multiply selling price by number of units. You will get total sales, guys. Okay, sir. Now, first let us check the variable cost. Guys, pay attention. Variable cost will increase by how much? Variable cost will increase by how much? 20%. Now, whatever is the variable cost per unit, now, per unit only will increase. Sir, only total, no, obviously when per unit increases, total also will increase, guys. Whatever is variable, plus 20% each. 300 plus 20%, 360. 100 plus 20, 120. 100 plus 120, sorry, 100 plus 20, 120. 60 plus 20, 60 plus 20, 72. 32 plus 20%. Everything plus 20%. Whatever was already there, plus 20%. Okay, sir. Now, same figures you will taking under both, okay, and multiply with number of units. Multiply it with number of units, guys. You will get, Divya, what do you get? Amount. Thank you. So you will get total variable cost, guys. Yes, sir. So total variable cost we have got. Per unit is how much, sir? 782.40. Both the places same. Please consider the same increase under both. Yes, sir. Then contribution per unit is also same, 97.60. If you multiply with number of units, you will get total contribution. If not, sales minus total variable cost. Yes, sir. Then with clear. Now, coming to, guys, fixed. You can present only in the total column. You can present only in the total column. Now, please be careful. Normally, if nothing is given, guys, I would have copy pasted the same fixed cost. Whether that 50% or 60%, same fixed cost I would have copy pasted. But here they have told some increase in fixed cost. How much? 15%. 12 lakh plus 15%. 13 lakh, 80,000. Take same. Take same. Next, 4 lakh 80,000 plus 15%. 550 to 550. Under both the level. Under both the level, total will remain same, guys. Yeah, sir, can I present per unit also? If you want, you can show. For example, 1380 divided by 60,000. Whereas here it is 1380 divided by 72,000. It will vary. Per unit will vary. Yes, sir. As you produce more, fixed cost per unit will decrease. Good. Total fixed cost you will get your, reduce it from contribution. You will derive profit. You will derive profit. If at all, if they ask your suggestion, at what level should we operate to maximize the profit? Your answer would be 60%. 60% because your profit is more. Your profit is more, guys. Actually, they have not asked anything, I guess. But if at all, if they ask, sometimes they ask you at what level the company should operate in order to maximize their profit. What level, Akshita? 60%. Question number 3, guys. K Limited produces and markets a very popular product called X. The company is interested in presenting its budget for the second quarter of 22-23. The following information are made available for this purpose. It expects to sell 1,50,000 bags of X. Now X is what for them? Output. During the second quarter, 22-23 at the selling price of 1,200 per bag, budgeted sales tax, both in quantity as well as value. Each bag of X requires 2.5 meter of raw material Y and 7.5 meter of raw material Z. Stock levels are planned as follows. Beginning to end. That means opening stock or closing stock. Yeah. Yes, sir. Finished bag set. That is nothing but output. Opening 45, closing 33. Raw material Y and Z, both are raw material. Please be careful. Opening and closing is given. Empty bag is also raw material. Yes, sir. So these three are input, guys. This is output. Oh. Y cost 160 per meter, Z cost 30 rupees per meter, and empty bag cost 110 each. It requires 9 minutes of direct labor to produce and fill one bag of X. Labor cost is 70 rupees per hour. Guys, how many minutes in an hour? 60. So per minute, how much we will calculate? Into, for each unit, how much minutes is required? 9 minutes. So what is the labor cost per bag, guys? Per bag. 10.49. Okay, let 10.5. Hope you understood now. Clear? Please be careful. 70 rupees is per hour. But how many minutes of labor work is required for each bag? 9 minutes. So I have calculated what is the labor cost per bag. Variable manufacturing cost are 60 rupees per bag. Fixed manufacturing cost are 40 lakh rupees per quarter. They have given in total. Okay. Variable selling and administration expenses are 5% of sales. And fixed administration and selling expenses are 3,75,000 per quarter. Okay. Required. Prepare a production budget for the said quarter in quantity. Prepare a raw material purchase budget for Y, Z and MT bags for the said quarter in the quantity as well as in rupees. Guys, they have asked raw material purchase budget. Before calculating raw material purchase budget, we should calculate what? Raw material consumption. Raw material consumption is based on what? Output produced. Output produced. Anyway, first budget is production budget only. Based on that, I will calculate how much raw material I have consumed. For that, I will adjust opening stock and closing stock. I will get what? Raw material to be purchased in quantity. Multiply with the price, you will get in rupees. Clear? Yes, sir. Then compute the budgeted variable cost to produce one bag of Z. Sorry, X. Budgeted variable cost. Okay, only variable they are asking. Fine, sir. Sure, we will do this. Easy one. When compared to what we did in the class, this question is bachu only. Yeah, production budget. Production budget is for whom? X output. Please be careful, guys. Take the right numbers in the right places. Because they have given the information about raw material output, everything. You might get confused and take wrong figures in wrong places. Yes. Budgeted sales. Guys, I had written all the equation and I explained you what to take. Clear? I will just write it again. Opening stock plus production minus closing stock is equal to sales. If I interchange the position now, I need to calculate production. So closing stock and opening stock, I will take it to the opposite side. So sales minus opening stock plus closing stock will be equal to what? Production. That is what we are using here. Desired closing stock and all they have used. You can just tell closing stock. Okay. Budgeted sales 1,50,000 and closing stock minus opening stock. You will get production. Budgeted production 1,38,000. How many bags of eggs should I manufacture during this quarter, guys? 1,38,000 bags. For that, how much raw material is required? For each bag, I require 2.5 meter of Y and 7.5 meter of Z and 1 bag. So how much production? 138. Now calculate. 138 into how much raw material is required? Raw material consumed. This is nothing but raw material consumed, guys. Consumed. What happened? It is getting erased automatically. Yes. This is the raw material consumed. Yes, sir. How much, guys? 138 is the production into 2.5. Same for Z. 138 into 7.5. Then empty bags 138 into 1. This is the total raw material consumed during the quarter. Yes, sir. Add closing stock and deduct opening stock, guys. You'll get raw material to be purchased. Raw material to be purchased. Guys, we did this. Hope you guys remember. We would have done it as a two separate calculation. Consume separately, purchase separately. Because in my question I had asked separately. Consume separately, purchase separately. And here, can I do straight away purchase? No. Without consumption, you cannot find out purchase. That means even consumption you have to find out, guys. Please be careful. Know that steps, guys. Consumption depends on what? Production. So first, even by chance assume, sir, production budget is not asked in the question. They are straight away asked raw material purchase budget. Should you do production budget? Yes. You have to do production, find out consumption of raw material on production, then add and adjust the opening stock and closing stock. That is add closing stock and deduct opening stock. You will find out how much raw material to be purchased. Okay. Cost per meter or bag, guys. Here it is meter. 160 rupees per meter, 30 rupees per meter, and here it is 110 rupees per bag. Multiply both. Multiply both. You can show. 1 second. I will give a notations. A, this is B. So this is A into B. Cost of purchase or purchase budget. How much, guys? 5 crore 23 lakh 20,000 is for Y. 3 crore 1 lakh 50,000 is for Z. And empty bag 1 crore 22 lakh 10,000. Yes, sir. Then variable cost per unit they have asked. Raw material, guys. Per unit they have asked. Please be careful. So 2.5 meter into, for each meter, what is the cost? 160. So per unit or per bag is how much? 400 rupees cost, raw material cost. Z, for each unit we require 7.5 meter. For each meter the cost is 30. What is the material Z cost for each bag of X? 225. Empty bag cost is 110. Labor, I already explained this, 10.5. Correct? Yes, sir. Variable manufacturing overhead, they only given 60. So variable cost of production per bag, 805.50. Guys, please be careful. Variable cost of production. Just a minute. Yes. I will go back and check it once. Variable cost to produce one bag they have asked. That is why they have not taken this, guys. Variable selling and administration is not taken because they have asked variable cost to produce. If they had just asked what is the variable cost per unit, I would have taken that also. I would have taken that also. Hope you are understanding. Please observe because by mistake, guys, you will not observe this word. Variable cost is asked, let us add that also. Correct? It happens. Please observe small things in the question which would have been given. So they have asked only variable cost to produce. If they had asked only variable cost, guys, then I would have considered even this. Anything else is there? No. Variable manufacturing cost anyway I have taken. Fine, sir. Sure. We'll move to the next question. ABC Limited is currently operating at 75% of its capacity. In the past 2 years, the levels of operations were 55% and 65%. Okay. Past 55, 65, now they are currently operating at 75. Presently, the production is 75,000 units. So at 75%, what is the production, guys? 75,000 units. The company is planning for 85% capacity level during 22-23. That is upcoming period. The cost details are as follows, guys. 55, 65, 75 they have given. Okay. Flexible budget. Question is on flexible budget. Okay. What all costs they have given, guys? Direct material, direct labor, factory overhead, selling overhead, administrative overhead. Our job is to identify which is fixed, which is variable, or which is semi-variable. Clear? Sir, how will I know? Guys, you know the output at each level, na? At the 75%, 75,000. Means at 65%, at 55%, at 40%. Not even I asked. Chalo. Direct labor, direct material, direct labor, factory overhead, selling overhead, administrative overhead is given. Fine. Administrative overhead, one tuck and I can tell. Fixed rate. Okay. Rest we need to check it. Okay. Direct material, direct labor, for sure it will be variable. For sure it will be variable. I have told you up to prime cost will always be variable. Sir, how will I cross check, sir? 11 lakh divided by 55. 20. 30 lakh divided by 65. 20. That means it is variable. Per unit is same means it is variable. Next, direct labor. 5 lakh 50 divided by 55,000. 6 lakh 50 divided by 65. You will get same. 110 extra stability. Clear? Yes, sir. Next, factory overhead. 3 lakh 10,000 divided by 55,000. Okay, 5.63. 330 divided by 65. Not same. That means semi-variable. Okay, overheads, you know, it can be variable or it can be fixed. So it is a combination of both. Selling, check it. 320 divided by 55,000. Okay, 5.8 something you will get. 3 lakh 60 divided by 65. Not same. That means semi-variable. Total also not same. Per unit also not same means what? Semi-variable. Total same means fixed. Per unit same means variable. Not both also means semi-variable. We identified, right? Yes, sir. Okay. And see, for easy sake, I am telling you guys, direct expenses will always be variable. Like direct material, direct labor, other direct expenses will always be variable. Clear? Whereas overheads can be both. Can be both. Yes. Sure. Profit is estimated at 20% on sales. The following increase in cost are expected during the year. Oh, okay. So in the budgeted period, there is some increase. Direct material 8%, direct labor 5%, variable factory overhead 5%, variable selling overhead 8%, fixed factory overhead 10%, fixed selling overhead 15%, administrative overhead 10%. Guys, here only they would have given the hint for you. About what? What category of expense it is? What category of expense it is? That means this are both are sir, variable as well as fixed are. Yes, sir. Because they have given a breakup here. It is a hint for you. Yes, sir. Prepare flexible budget for the year 22-23 at 80% level, 85% level. of capacity. Also ascertain the profit and contribution. Guys, that means you have to give a breakup between variable and fixed. And it is must under flexible budget. Whether they tell or not, you have to give breakup for sure. Because you are showing how much is variable, how much is fixed, guys. Yeah, come to the solution. Yeah. Straight away they have done budget only because they have asked only for 85% level. Yes. Budgeted for 85% capacity level for the period 22-23. Guys, first we have to derive some figures. They have done a lot of things here. Direct materials, 15 lakh at 75%, 65%, 13 lakh. So percentage change is 10%. So the amount is 2 lakh. And here also they have compared. So much drama not required. You tell variable cost per unit is same. So sorry, direct material cost per unit is same. So it is variable in nature. Per unit how much, guys? Per unit. Either of the level you calculate. Either of the level you calculate. At 55% only you do. What is the direct material cost there? What is the amount total? 11 lakh divided by 55,000. 20. Yes, sir. You got 20. There is some increase. How much, sir? 8% increase. So in the present period, it will be how much, guys? 21.60. What is the unit in the budgeted period? 85,000 units. So it would be 85,000 units into 21.60, which comes to 18 lakh 36,000. 18 lakh 36,000. Yes, sir. This is the budgeted cost, budgeted material cost for the budgeted period. Upcoming period. Yes, sir. Coming to labor. Guys, labor also is variable. Huh? Yes, you can just write one sentence. They have done lot of things here. I don't think it is required. Here, just tell. As direct labor cost per unit remains same, it is variable in nature. Variable cost per unit is equal to. Take the direct labor cost at 55%. How much? Direct labor cost at 55%. 5 lakh 50 divided by 55,000. 10 rupees. Okay, sir. 10 rupees be got. Take like that, guy. Here, I don't suggest to follow in this way and all. Not required. So much time you will not have. Okay, sir. 10 rupees per unit. Direct labor cost. Now, what is the increase? 5% increase. So, budgeted paid per unit how much? 10.5. How many units you are producing? 85,000. So, what is the cost? 8 lakh 92 500. 8 lakh 92 500. Then variable factory overhead. Ah. See, here breakup is required. Listen, what do you do, guys? When it is semi-variable, how do you find out the variable portion? Change in cost divided by change in output. Correct? Yes. Take any two level. 55 and another level is 65. 55, 65. What is the change in cost, guys? Change in cost. Hello. 20,000. Okay, sir. Change in output. 55,000, 65,000. So 65 minus 55, 10,000. So what is the variable portion per unit? 2 rupees. Hope you are understanding. When it is semi-variable, how do you find out the variable portion? Change in cost divided by change in output. We took 55, 65 percentage. Sir, can I take 75? Any two you take, you will get same only. So change in cost is 20,000, guys. Change in output is 10,000. You will get how much? 2 rupees. This is variable cost per unit. Now take any one level and try to figure out how much is fixed portion. How much is fixed portion? What they have done? Okay, 75,000 they have done. Okay, for 75,000 units, guys, what is the variable cost? 75,000 into 2, 1 lakh 50 you will get. What is the actual total overhead there? At 75%, 3 lakh 50. So 3 lakh 50 is total. From that you remove variable portion. You will get fixed. You will get fixed. Now fixed will be same at all the levels? Yes, sir. Hope you guys are getting it. Sir, why they have taken 75%, sir? Can I take 65, 55? Anything you do, you will get same. But this accordingly will change. If you take at 55%, then you have to do 55,000 into 2. Whatever you get is variable portion, reduce it from total overhead cost, you will get fixed portion. Fixed cost will be same 2 lakhs. If you want, I can show it also. 55,000 units into 2. How much is my variable portion, guys? 1 lakh 10,000. What is the total overhead cost at 55%? 3 lakh 10,000. This is total. So from that, if I reduce variable, how much is fixed, guys? 2 lakh. Are you getting same? Yes, sir. Fine, guys. Now, variable cost will increase by 5% itself. So it comes to 2.10. And fixed cost will increase by 10% itself. How much is that, guys? 2 lakh into 1.10. Okay, 1.10 or into 110% or plus 10%. You can do either. 2 lakh 20. Even variable you can find out for into 85,000 into 85. That is for budgeted period. How much? 1 lakh 17 for 78 500. 178 500. Oh, 178 500 and 220. Let us see how that is. 178 500 and 210. Where is that? 220. Yeah, 220. Okay, sir. Let us move forward. Next item. This is also semi-variable only, I guess. Semi-variable. They have written, you see, selling overhead is semi-variable overhead. So guys, this and all is not required. Change in expense divided by change in output. How much you will get, guys? 4 rupees per unit. 4 rupees per unit. And they have taken at 75% and they have done the calculation once. At 75% they have done the calculation. At 75% they have done the calculation. How much, sir? 75,000 into 4, which comes to 3 lakh. Guys, what is the total overhead cost at 75%? 4 lakh. 4 lakh minus variable cost 3 lakh will give you fixed cost 1. At any level, will it be same, sir? Yes. Sir, can I check it at 55%, 65%? You will get same. From total, if you remove variable portion, you will get fixed cost. Okay, sir. So variable selling overhead is 4 rupees. It will increase by 8%, which comes to 4.32. Hope you guys are understanding how we took that 1.08 and all. 8% increase. Or else you can take into 108%. Or simply 4 plus 8%. Plus 8%. You will get same. Okay, fixed selling overhead will increase by 15%. So 1 lakh into 1.15 will give you 1 lakh 15. Here also you can multiply, guys, into 85,000. How much? 3 lakh 200. This is the total variable cost at 85%. Total variable cost, and here this is fixed cost. Okay, let us see. Have they taken 367 200 and 1 lakh 15,000? And administrative overhead is fixed, but there is increase in that also, guys. 1 lakh 60, 10% increase, 176. 176. Okay, sir. 176. Okay, sure. So, variable cost total, better you draw a line here. Fixed cost total 5 lakh 11,000. Now add up both. Maybe give the notation. A, this is B, this is A plus B. They asked you to show contribution specifically, huh? Better you would have shown here itself. Okay. After variable cost. That is, you show there only. Sales minus variable cost is equal to contribution. You can better start with sales also on the top. They have done it differently. In this way also it's fine, but better way is start with sales, then calculate all the variable cost. Total variable cost you reduce from sales, you will get contribution. Then show all the fixed cost, calculate total fixed cost, reduce it from contribution, you will get profit. That is a better way of presenting this. Yes. So I had a 20% profit on sales, but we don't know sales. Convert the profit percentage on cost. How's the cost plus profit is equal to sales, guys. Now sales, let me assume it to be 100. So profit is 20. So cost is balancing figure 80. What is the profit percentage on cost? 20 by 80, sir. 20 by 80. If you want to convert it into percentage, into 100. Yes, sir. So sales is 47 lakh 31 500. Contribution would be sales minus variable cost. Clear. And maybe why they have taken sales here was we don't know sales until we calculate total cost. If you already know, maybe you will start with sales only. If not, you can show it as like cost sheet format. Total cost plus profit is equal to sales. Then you show the contribution separately. Then you show the contribution separately. The main reason why they have taken here, guys, because sales is not known at the end. Sorry, sales is known only at the end. We don't know at the beginning. Yes. All this are done. We have covered everything. but I am not so convincing with the way they have prepared the working note. Hope you guys understood what I explained. We are doing with 4. Question number 5. The accountant of manufacturing company provides you the following details for the year 21-22. Direct materials 175, direct wages 1 lakh, fixed factory overheads 1 lakh, variable factory overheads 1 lakh. Other variable cost 80,000, other fixed cost 80,000, profit 1 lakh 15, sales 7 lakh 50. Sir, everything is given. Very good. During the year, the company manufactured 2 products, A and B, and the output and cost were as follows. Output A 2 lakh, B 1 lakh. Selling price per unit 2 and 3.5. Direct materials per unit 0.5 and 0.75. Direct wages per unit 0.25 and 0.5. Variable factory overhead is observed as a percentage of direct wages. Okay. This and all we have learned in the cost sheet format also. Other variable costs have been computed as product A 0.25 rupees per unit, B 0.30 per unit. During 22-23, it is expected that the demand for product A will fall by 25% and for B by 50%. It is decided to manufacture a further product what? C. Okay, launch one more new product. To compensate whatever is the fall, we are launching new product. The cost per which is estimated as follows. Output 2 lakh, selling price 1.75, direct materials per unit 0.40, direct wages per unit is 0.25. Okay, sir. That is for the new product. It is anticipated that the other variable cost per unit will be same as per product A. How much was for product A? 0.25. So here also it would be 0.25. Prepare a budget to present the management showing the current position. Current position means everything is given copy paste in the format, obvious. And the position for 22-23. That means we will bring a new product into picture. But guys, please be careful. There is a fall in sales also of A and B. Okay, sir. Comment on the comparative result. Which is better? Which is better? Okay, first 21-22, let us analyze, guys. 21-22. Sir, they have done it together, no, sir. Can I do till year one separately table, year separate table? That is also fine. That is also fine, guys. Clear, sir. To do everything in one particular table, it will confuse me, sir. Can I do it separately? That is fine. You can do it, no problem. Yeah, silence, silence. Sales, guys. First, I am going with 21-22. Sales 2 lakh and 1 lakh. Selling price they have given, guys. Multiply. What is the selling price of A? 2. This is 3.5. 3.5. Correct? Huh? A and B. Multiply, you will get sales in rupees. This is sales in rupees. Direct material, direct wages. Directly they have taken. Fine. Let me just show you how they have derived. Ah, direct material per unit, silence. Direct material per unit, wages per unit they have given, guys. How do we calculate it? 0.5 into 2 lakh, 0.75 into 1 lakh. You will get material cost for A and B. Same way wages. 0.25 into 2 lakh, 0.5 into 1 lakh. You will get wages cost. You will get wages cost. Yes, sir. Variable factory overhead is observed as a percentage of what? Direct wages. Guys, first find out the percentage. Variable factory overhead, right? 1 lakh divided by 1 lakh, 100%. Based on the past full year data, I am calculating. What is the factory overhead absorption rate? 100%. 100%. So in my answer also, whatever direct wages we will get for A as well as B in total, 100% of that will be variable. 100% of that would be variable. Okay. Other variable costs have been computed as 0.25 and 0.30. So 0.25 into 2 lakh. Then 0.3 into 1 lakh. Wow. Next one is product C that we will see later. Yes. Understood? Material, wages we will get. Guys, factory overhead variable portion is straight away 100% of wages. 100% of wages. Sir, how did you get that 100%? How they show? No, better you show. Okay, that full year data they have given. Na? There you calculate. Variable factory overhead divided by direct wages into 100. How much you are getting, sir? 100%. 100%. I guess it was 1 lakh divided by 1 lakh. Clear? So it is 100%, sir. So based on that, you apply. You can also write your better 100% on direct wages. 100% on direct wages. Better write, guys. They're not sure. Okay. Other variable cost per unit is given, guys. Just multiply with number of units. You will get the total other variable cost. Fine, sir. So add up all the variable cost. You will get marginal cost. Deduct it from sales. You will get contribution. Then fixed cost, guys, only total is given. I'm not sure about what is the breakup between A and B. So what should we do? Take it only in total column. Take it only in total column. 1,80,000. Sir, why are you not taking product wise? Have they given? No. How will I give a breakup? We also are not sure. We are also not sure, guys. Correct? So 1 lakh and this 80,000. 1 lakh and 80,000, we are taking total only. Sir, whereas others and all, why didn't you take this figure, sir? We knew product wise. We went with that calculation. We ignored our total. For me, variable always, I took per unit into multiplied with number of units. Whereas fixed, they have not given product wise how much. So I am going with what? Total guys. 1 lakh, sorry, this 80,000. Straight away copy paste in the total column. Okay. So what is the total fixed cost? 180. So profit at present level is 1,15,000. Profit also we cannot calculate product wise as we don't know fixed cost product wise. So overall profit of the company is 1,15,000 at present. Now coming to proposed. Guys, there is a fall. Please be careful. There is a fall. Sales. Is it same units? No. 2 lakh will decrease by how much? Fall by how much? 25%. So 2 lakh minus 25%. 1 lakh 50. 1 lakh will fall by 50%. So 50,000. We are launching one more new product. See, please be careful. See, newcomer. What is the sales of that? 2 lakh. Multiply with the selling price. Selling price is how much? 1.5 year. Huh? Sorry, 1 point? For B. One second. B is C is 1.75. A and B, two, same one. There is no change in that, huh? Okay, same. Selling price, I think. One second, I will just observe. Is there any increase or decrease in selling price? One second. Only sales will fall. Selling price will not change. Only new product 1.75. That means same selling price as 2 rupees and 3.50. 2 rupees and 3.50. Same selling price. Okay, sir. Yeah. So we will get the sales now in rupees. Then calculate the direct material cost, guys. Calculate the direct material cost. Yes, per unit they have given. Multiply with the number of units. Number of units has changed now. Please be careful. So into 1,50,000. How much is the material cost per unit? 0.5 into 1,50,000. 75,000. For B, 0.75 into 50,000, which comes to 37,500. For C, it is how much? 0.4 into 2 lakh. Into 2 lakh, which comes to 80,000. Yes, sir. Same way you do to wages also, guys. Same thing you do to wages. Factory overhead also same thing. Per unit is there. Calculate it for number of units. Please don't copy paste the same. Number of units have changed. Yes, sir. And other variable cost for C they told it is same like A or B. I think A, na? Product A. Yes, I had written here 0.25. Other variable cost is same like product A for C. How much is that? 0.25 rupees per unit. Okay. Yes. Other variable cost for C, please be careful. 0.25 into 2 lakh. 50,000. Okay, sir. You will get total variable cost deducted from sales. You will get contribution. So now fixed cost will remain same, sir. Sir, we have introduced new product now, sir. Fixed cost has to increase. No. Whatever is now is unutilized capacity of A and B. We are using it for C. Why, sir? Because sales of A and B is falling down. To compensate that, we have introduced C. As nothing is given, we will assume fixed cost is same, guys. Don't consider any increase and all. If you consider increase also, how much will you consider? Question mark. Correct? So don't do that, anything like that. If they themselves give it increase by 10%, 20%, consider it. Total fixed cost is 180. Reduce it from contribution, you will get profit 125. Sir, which is better? 125. Yes. Introduction of product C is likely to increase profit by 10,000 in 22-23 as compared to 21-22. Therefore, introduction of product C is recommended. Work. For that, you have to forego A and B also. Ready for it. They're ready for it. Okay. Come to question number 6. Yes. TQM Limited has furnished the following information for the month ending 30th June. Units produced and sold 80,000, 72,000. Sales 3,20,000, 2,80,000. Guys, units are not same. Please be careful with that. Sales, guys, 40,000 adverse. Sir, how come, sir? It is favorable, sir. Actually, it's less than budgeted. No, favorable, right? Sales is reverse. You have made less sales than anticipated. Good or bad? Bad. Unfavorable. Cost is different, sales is different. Cost is, sir, expenses we have to pay for it. Whereas revenue, sales is revenue. Direct material, direct wages and all you can see. Actual is less than budgeted. That means good, sir? Yes, favorable. Variable overhead, favorable. Fixed overhead, favorable. Total cost. Okay. Guys, what analysis they have done and calculated the variance? Is it correct? Divya, is it correct, Divya? Very good. Thank you. It is wrong. It is wrong. Why, sir? Because the number of units are not same. Sir, question, no, sir. Correct only, sir. How can question be wrong? Then what will you do if everything is correct there? Chill on. Guys, please be careful. The number of units are not same. So budget should always be for means, especially when variance I am calculating. Okay, budget can it let it be for anything. Standard should be for what? Actual. Now, while calculating variance, guys, standard data should always be converted into what? Actual. Correct. Only then I can compare both because the base for comparison should always be same. Yes, sir. Standard cost of the product are as follows. Direct material 1 kg at the rate of rupees 1. Direct wages 1 hour at the rate of 1.5. Variable overhead 1 hour at the rate of 0.5. Okay, sir. Actual results for the month showed that 78,400 kg of material used. Actual quantity used is how much? Rahul. Actual quantity used is how much? 78,400. And 70,400 labor hours were recorded. Means actual hours work 70,400. Clear? This is actual quantity and this is actual hours. Okay, sir. Required. Prepare flexible budget for the month and compare with actual results. Okay. Calculate material, labor, variable overhead and fixed overhead expenditure variance, guys. Combination of budget and standard costing. This question is a combination of both, guys. Easy. See, looks like difficult. Very easy question. Look here. Because everything is given in the question only, sir. That standard I need to convert for actual. That's all. Master budget for 80,000 units. Now I need to convert all of them for how many units, guys? 72,000 units. Why, sir? Actual is for 72,000 units. Correct, no, Divya? Actual is for how much? 72,000 units. So budget also converted for 72,000 units now. Okay. Now, guys, sales. Selling price how much? 4 rupees. So into 72,000 units, 280. Actual, they only given straight away take. Okay, sir. Now, actual is less than budgeted. That means favorable or adverse? 8,000 adverse. 8,000 advance. Sir, something else was given in the question. Some 40,000 advance, sir. No. Now we have to compare what? For 72,000 units both. What should have been for 72,000? What is actually for 72,000 units? Okay. Fine, guys. Material cost, wages cost, variable overhead per unit is given. Per unit is given. Yes, sir. Multiply with 72,000 units, guys. Multiply with 72,000 units. You will get material 72,000, wages 1,08,000, variable overhead 36,000. And actual figures, whatever is given in the question, copy paste. Copy paste, guys. So, what was the standard material cost? 72. But actually, you have incurred 73,600, 1,600 extra. Adverse, yes, sir. Here, please calculate. Let me give a notation if you want. Okay, this is, let me give for this B or else A only. A, this is B. Okay, so this would be A minus B. Only for sales it would be reverse, guys. Please be careful. If actual is less, it is not a good sign. Actual should be more than budgeted. Okay. Same way for direct wages, standard cost was 1,08,000, guys, but actually I have incurred 1,04,800. Good, I have saved something. How much is favorable? 3,200. Then variable overhead, 36,000 is standard, but actually I have incurred 37,600, 1,600 advance. Okay, sir. Total variable cost we got. Contribution also they have shown, that is variable cost, that is sales minus variable cost. Fixed overhead, have they given? 40,000, I guess. They have given a 1 second, 1 second. I will come. 40,000 is given. Whether it is for 80,000 units or 72,000, it will remain same. Yes, sir. So let me go with that. Yes, same 40,000 units, guys. Same 40,000. Per unit they have shown 0.5 here. It's actually wrong. Okay, so 40,000, same 40,000 we have to take here. Sorry, where is it? Oh, yeah. Fixed over it. 40, 40. Guys, it should not be 0.5 here. If you ask me 40,000 divided by 72,000, how much it is? It is less than 0.5. Sorry, more than. Okay. For this, actually it is 0.5. Not for 72,000 units. Not for 72,000 units, guys. So, take same 40 here. Maybe unit column you can ignore also. No one. Yeah. Actually 0.5 is not the per unit cost for 72,000 units, guys. Please be careful. Okay. Actually, whatever is there, you take it 800 favorables. 800 favorable. Okay. Net profit also is computed. Net profit is also computed. Okay. Budgeted was 32,000, whereas actual is 24,800. 7,200 adverse, sir. Now, they have also asked variances, guys. This is first part. This is first part. Second part. Direct material cost variance. What is the formula for material cost variance, guys? Standard material cost minus actual material cost. So, standard material cost minus actual material cost. We already found out 1,600 adverse. Sir, when they have asked separately, should I show again? Yes, show the calculation. Don't say refer above. Refer above calculation. Show the formula and show the calculation. Then price variance. What is the formula, guys? Standard price minus actual price into actual quantity. Actual quantity is given in the question. Bottom, I made you guys write it. How much is that, sir? 78,400. Standard rate is how much, guys? 1 rupee. 1 rupee. Actual rate 73,600 you have incurred. Not for 72,000. No, 72,000 is output. How much cases of raw material we have used? 78,400. Where is it given? In the question last line. Correct? Yes. What is the actual rate per unit? Actual rate per unit. Hope you guys are getting it. Per kg or per unit? Here, 78,400 is kgs or units, sir? Actually, I guess it is kgs. Okay, they should have mentioned here as kgs. You can change it. It is kgs. Output is in units, whereas input is in kgs, guys. Hope you understood, guys. I repeat, standard rate 1 rupees. Actual rate they have not given. How do I calculate it? Actual material cost divided by actual quantity used. Divided by actual quantity used. Guys, see why I am stressing on this is by mistake you may take 72,000 here. 72,000 is output, whereas 78,400 is input. Clear? Here we are supposed to take actual rate per kg of raw material. Per kg of raw material. And I guess you will get decimal. That is why they just kept like that itself. Clear? Yes, sir. So finally you will get how much guys? 4,800 favorable. Then usage variance. What is the formula? Standard quantity for actual output minus actual quantity into standard rate. Standard quantity, have they given? Have they given? Hello, in question you go. Check for 1 unit of output. What is the raw material to be used? 1 kg, yeah. 1 kg for 1 unit of output. What is my actual output? 72,000. So what is the standard quantity for actual output? 72. Correct? 72,000 kg. Not units, kgs. Whereas actually used how much? 78,400. Actually used 78,400 into 1. 6,400 advance. Guys, hope you understood. 72,000 units, what they have taken is not output. You may understand like that only. That is standard quantity for actual output. Guys, they have given in the question for each and every unit of output how much raw material you are supposed to use. How much it is? 1 kg. Multiply that with output 72,000 units. How much will you get? 72,000 kgs. This is what happens, guys. When students are referring to the material by themselves, they find all this confusing. And moreover, here they have not given kgs also. That will confuse more. They have given it as units. So this is raw material or output also. Yes, guys. So 6,400 adverse tax. Yes. Next, going to labor calculation. Direct labor cost variance. Guys, what's the formula? Standard labor cost minus actual labor cost. We already have it. Standard labor cost minus actual labor cost. You will get how much? 3,200 favorable. 3,200 favorable. Direct labor rate variance. What is the formula? Standard rate minus actual rate into actual hours spent. Clear? And here spent and worked is one and the same because there is no idle time on that. Yes, sir. Standard rate 1.5. They have given in the question. You can check. 1.5 they are given, guys. If you want, I can show it here also. 1.5. For each hour, the payment is 1.5. Okay, sir. Now, for each unit, what is the hours required, guys? For each unit, what is the hours required? Question. 1 hour. So, for 72,000 units, how many hours I was supposed to take? 70. Okay, this is still hours is not required. Okay, actual hours is 70,400 given in the last line of the question. Actual hours. This is actual hours. Standard rate is 1.5. Actual rate, guys. This is actual rate. How, sir? Actual labor cost is how much? 1,04,800. That is for how many hours, guys? 72 Allah. Hey, that is standard hours you are telling. 70,400 hours. Guys, actual rate is for actual payment. Correct? So actual labor cost divided by actual hours worked or spent. Yes, sir. So you will get actual rate here. Clear? 72,000 would be standard hours. Please be careful. How much is that? 800 favorable. 800 favorable. Then coming to direct labor efficiency. What is the efficiency variance formula, guys? Standard hours for actual output minus actual hours into standard rate. Okay, sir. Standard rate they have taken first itself 1.5 rupees per hour given in the question itself. Standard hours is how much, guys? 72,000 hours. 72,000 hours. How did we get that 72,000 hours? In the question it is given for each and every unit. How many hours you are supposed to take? 1 hour. Actually, you have produced how many units? 72,000 units. So, standard hours for actual output is 72,000 hours. Minus, actually you have taken how many hours? Same 70,400 hours. Into standard rate, that will give you 2,400 favorable. Then coming to overhead, only one calculation. Variable overhead. Recovered minus actual. Recovered is how much? 0.5 rupees for each and every unit produced. For each and every unit produced. Yes, sir. How many units we have produced? 72,000 units. So it is 36,000. Then actual, they only given in the question 37,600, which comes to 1,600 adverse. 1600 adverse, guys. Then fixed overhead expenditure. Budgeted minus actual. Budgeted was how much, guys? 40,000. Actual is 39,200. So 800 favor. 800 favor. Clear up. This is complete package on budget along with what? Variances. That is standard costing. Question number 7. Yes. Jigyasa Limited is drawing a production plan for its two products, Minimax ML and AV High HH. For the year 22-23, the company's policy is to hold closing stock of finished goods at 25% of the anticipated volume of sales of succeeding months. Okay. Whatever is the next month sales, 25% of that we will maintain in the current month as what? Closing stock. Okay. The following are the estimated data for the two products, guys. Budgeted production in units, direct material cost per unit, direct labor cost per unit, manufacturing overhead. For both the products it is given. For both the products they are given it. The estimated units to be sold in the first 4 months of the year in 22-23 are as in. They have given 4 months data. April, May, June, July. Estimated units to be sold, guys. For Minimax and AV High, both they have given sales in units. Sales in units. Prepare production budget for the first quarter in month wise. First quarter means April, May, June. Why they have given July data? Maybe to calculate closing stock. Maybe to calculate closing stock for what? June. Yes, guys. Production pattern they have given? No. Closing stock they have given. Sir, what about opening stock? Hey, Rohit, closing stock of this quarter will be the dash of next quarter. Opening stock. Correct? Yes, sir. Chalo. Production budget of product Minimax and Heavy High HH. Okay. April, May, June under the two columns guys for two products. For two products. Sales they have given guys. Just copy paste from the question. Total we need to do. Total we need to do. How is it, sir? For MM, 8,000, 10,000 plus 12,000. For HH, 6 plus 8 plus 9, 23,000. Okay, sir. Guys, please pay attention now. Closing stock. You know the equation now? I already explained this, guys. Opening stock plus production minus closing stock is equal to sales. Now, if I want to find out the production, then what do I do? Sales minus opening stock plus closing stock is equal to production. Is equal to production. Okay. Closing stock. Pay attention. Closing stock. 6,000 into 25%. Sorry. 10,000 into 25%. 2,500. Okay. Same way. 8,000 into 25%. 2,000. Please be careful with the columns. Next. 12,000 into 25%, 3,000. 9,000 into 25%, 2,250. Next month, sales into 25%. Okay. Now, for July, they have given guys. Can we calculate the closing stock? Yes, July month sales is given in the question. I have not written here. It is not written here, but it's given in the question. Yes, sir. So take July sales into 25%. You will get these two figures. 4,000 and 3,500. Yes, sir. Now coming to opening stock. Let me keep this on pending, guys. Now, this will become opening stock for next quarter. Sorry, next month. Yes, same way. This 3,000 and 2,250 will become opening stock for next month. Same way. This. That's all. Next. Sir, first month, what about it? Guys, listen here. This is the key here. This is the key. Now for March, they would have maintained closing stock of how much? Uma Maheshwari. How much closing stock they would have maintained? April sales into 25%. Correct? So, April sales into 25% you take. 8,000 into 25%, 2,000. 6,000 into 25%, 1,500. Sir, what are you doing, sir? That was closing stock for March, no, sir? Yes. Closing stock of March is the opening stock of April. Hope you understand. That is the key point here, guys. That is the key point. Mark star. How much ever star you want? Already they have given one star. You add one more star. Hope you understood. Closing stock for March is opening stock for April. Guys. Rest all continues. Opening stock of April is the closing stock of March, which is as per the company's policy, 25% of next month's sales. You can mention there, April. 25% of next month year means April. Okay. Next, production cost budget, guys. Production cost budget. How many units we are producing, sir? Totally 32,000 units and 25,000 units in a quarter. In a quarter, guys. Okay, total. What is the cost for each unit? 220 for mm. So 220 into 32,000, 70 lakh 40,000. For HH guys, 280 into 25,000, it would be 70 lakh. Then labor cost, 130 into 32,000, 41 lakh 60,000. Then 120 into 25,000, it is 30 lakh. Yes, sir. Instead of showing here, you can show better here itself is what I feel. The calculations. Yes, sir. Manufacturing overhead guys. 4 lakh is for 180. How much for 32,000? Same way. 5 lakh is for 120. How much is for 25,000? Sir, 4 lakh and 5 lakh. What is that figure you are talking about, sir? Let me show. Let me show it. Manufacturing overhead you can see guys. Clear, huh? Yes. That is for how many units, guys? 180 and 120. But what we have produced is same, huh? No. So divide. 4 lakh is for 180. How much is for our production units? Same way. 5 lakh is for 120. How much for our units? Clear. Please be careful, guys. Don't straight away take 4 lakh and 5 lakh. Clear? Yes. And they have given manufacturing overhead. Sir, have I assumed it as variable? Yes, just give a note for that also. Just give a note for that also. Is that clear? Now, sir, can I do this, sir? Change in cost divided by change in output, I can find out variable. No, they both are not same product. So, if it is same product, data is given for 2 period, you will do that. Correct, no, Nitin? Understood? Listen here. Guys, when it is semi-variable and all, we used to find out variable portion. Now, how we used to do? Change in cost divided by change in output. That is when 2 period data or 2 activity level data is given for the same product. Here, these two are not same. Minimax is different, ABI is different. So that means you cannot do that. So assume it to be variable. Manufacturing overhead they are given. So assume it to be variable. So 4 lakh is for 180. How much for our units? Same way, 5 lakh is for 120. How much for our units? And for this, just give a note, guys. Manufacturing overhead is assumed to be fully variable. You guys also add it. Is assumed to be fully variable. Manufacturing overhead is assumed to be fully variable. Yeah, let us move to the next question. Question number 8. Concord Limited manufactures two products using two types of materials and one grade of labor. Shown below is an extract from the company's working papers for the next month's budget. Okay, next month's budget. Product A and product B, they manufacture two products. Budgeted sales in units, budgeted material consumption per unit in kg. For each unit of A, I require 4 kg of X and 5 kg of X and 4 kg of Y. Then for each unit of product B, we require 3 kg of material X and 6 kg of material Y. Standard labor hours allowed per unit of product is 3 hours and 5 hours. All these are standard data. Material X and material Y will cost you 4 rupees and 6 rupees. Okay. Material X is 4 rupees and material Y is 6 rupees. Okay. Labors are paid at 25 rupees per hour. 25 rupees per hour. Overtime premium is 50% and is payable if the worker works for more than 40 hours a week, guys. So into 50%, that means 37.5. Overtime payment would be how much? 37.5. In that 12.5 would be premium. 12.5 would be premium. Yes. They will work for 40 hours a week. There are totally 180 workers. The target productivity ratio or efficiency ratio for productive hours worked by the direct workers in actually manufacturing the product is over 80%. Guys, how do you calculate efficiency ratio? Standard hours divided by actual hours into 100. How much is that? 80%. Okay. In addition, the non-productive downtime is budgeted at 20% of productive hours worked. So downtime is how much, guys? 20% of productive hours worked. What do you understand from all this? We make payment for this many hours, but no output. There are 4 5 days week in budgeted period, and it is anticipated that sales and production will occur evenly throughout the whole week. Okay, there are 4 5 days week. Okay, 4 weeks. So in a week, how many days? 5 days. And in a week, how many hours you will work? 40 hours. How many workers are there? 180 workers. All those are important to calculate hours. Sales and production will evenly occur. Okay. It is anticipated that the stock at the beginning of the period will be opening stocks. Product A, product B, output. Material X, material Y, input. Input to output. The anticipated closing stocks for the budgeted period is as follows. Closing stock. Input, output. Sorry. Reverse this. Output, input. Oh. Required. Calculate the material purchase budget and wages budget for the direct workers, showing the quantities and values for the next month. Okay. Material budget and wages budget they are asking. Fine. Let's come to the solution. Hours calculation especially is interesting in this question. Yeah, number of days in a budgeted period is how much? Times. 4 weeks. In each week, what is the working days, guys? 5 days. So what is the budgeted days? 20 days. Okay. Oh, they are not done any working kind of thing, not straight above calculation. Okay, guys, listen here. Budgeted sales they have given 2,400 and 3,600. Closing stock and opening stock. Guys, opening stock they have given straight away. Take it, copy paste. Closing stock they have given some pattern. Very interesting. Very interesting. Closing stock. I will just go back to the question and read and come. Closing stock. Closing stock you see. Product A, product B. 4 days sales, 5 days sales. Means whatever you sell for 4 days, you are maintaining it as closing stock for product A. Product B, 5 days sales. Guys, how many days is there in this period? 20 days. So, come on. Can we calculate now? 4 days and 5 days. Interesting calculations. See, listen. Listen, guys, all these are important. 2,400 is for how many days? 20 days. I want to maintain 4 days of sales as closing stock into 4 days. That is 480. Coming to product B. This is for A, the next one is B. B. What is the sales for the period? 3,600. Divided by 20 days. You will get per day sales out. How many days of sales you want to maintain as closing stock? 5 days. So into 5. Into 5. Hope you understood. If you divide sales by that 20 days, what do you get? Sales per day. And how many days sales you want to maintain as closing stock? 4 days and 5 days. Multiply with that. Multiply with that, guys. So what do you get now? Production. This is production. Okay, sir. Material purchase budget now. Material required how much, guys? This is production. Consumption. How much? 2,480 into, for each unit how much? 5 kg of X. And material by 4 kg. So 2,480 into 4 kg. This is for product A. For product B, sir, what is the production? 4,300 into, for each unit of product B, how much I require? 3 kg and 6 kg. Multiply. Given in the question. Per unit, what is the raw material consumption is given in the question. Multiply with number of units to be produced as. Number of units to be produced for each product into raw material requirement per unit. Oh. This is the raw material requirement. So if you add up both, how many kgs of material X required? 25,300. Material Y, 35,720. X and Y. Okay, sir. Guys, come on. Opening stock, have they given? Straight away copy paste. Copy paste. Opening stock. Closing stock is interesting. Guys, 25,300 you have consumed for how many days? 20 days. And how many days you have to keep it as closing stock? 10 days consumption. So 25,300 I have consumed for 20 days. Per day how much I have consumed? 25,300 by 20 into 10 days. Into 10 days. Okay, sir. Same way. 35,720 I have consumed for how many days? 20 days. If you divide by 20, you will get per day into 6 days. I want to maintain it as closing stock. Clear? Yes. Easy. Interesting. Interesting adjustment. Guys, all this and all you have to mark star. Did you? No, sir. Without you telling, okay, nice, sir. Chalo. So quantity to be purchased, we got consumption plus closing stock minus opening stock will give us what? Raw material to be purchased. And price, I had written that. They had given below the table, I had written that. 4 rupees per kg, 6 rupees per kg. Multiply both. You can take A and B, I guess product name only. So better you take different name. P, Q. This is P into Q. Total cost and the purchase cost this is. Okay. They have written simply total cost, purchase cost. Purchase cost in rupees. Purchase in quantity is here, guys. Purchase in rupees is last. Okay, sir. Now coming to wages budget. Units to be produced, guys. First one. Units to be produced 2480 and 4300. Okay, sir. Standard hours allowed per unit how much, guys? 3 hours, 5 hours. Given in the question. This is the hours which is allowed to take each produce each and every unit. Total standard hours how much, guys? Multiply both. Multiply both. You can take it. This as U, this as B. This would be U into B. U into B. Guys, standard hours. Guys, please pay attention. This is the key point. Key point. Listen. They have given the efficiency ratio as how much? 80%. Standard hours divided by actual hours into 100 is 80%. Now we have got this, our standard hours. How much, sir? 7,440, 21,500. How much is this of actual hours? 80%. Correct, huh? Hello? React. Okay, you are human beings now. Know how to react now? Good. React. Standard hours divided by actual hours into 100 is how much? 80%. Okay, if you are taking 80% into 100 will not. Fine. Okay, but ratio you will use into 100. Yes, sir. Now, standard hours. Can we calculate? Yes, sir. So standard hours is 80. We already got it, no? Yes, sir. Now, how much is actual hours? Can we calculate? Yes, sir. Divided by 80%. Divided by 80%. Guys, just interchange the position. Standard hours divided by 80% will be equal to what? Actual hours. Actual hours. So, this is nothing but actual hours worked, guys. Actual hours worked. How much is that, sir? Standard hours divided by efficiency ratio. Divided by efficiency ratio. You got actual hours worked. We will pay for actual hours worked as spent hours. Spent. There is something unproductive hours also. We are worked, but not given productivity. What is that? 20%. So add a 20% for us. 20% of 9,300. 20% of 26,875. Work, but no productivity. Work, but no productivity. Yes, sir. So, can I tell this as like similar to idle time? Idle time. The similar to idle time. What? Payment is made, but no productivity. But no productivity. Hours to be paid. In simple, it is called spent. Hours spent. We used to calculate now work to spend to idle load. Same thing, reverse calculation. That's all. We had standard hours divided by efficiency ratio. What we got here? Hours worked. Actual work. They told there is some. I will just read that sentence once. Okay. I will just read that sentence once. Yeah, this one. Okay. the entire sentence. The target productivity ratio or efficiency ratio for productive hours productive hours worked by the direct workers is how much? 80%. So when I do standard hours divided by 80%, what do I get? Actual hours worked, not spent. Actual hours spent, worked, not spent. In addition, the non-productive downtime is budgeted to be 20% of productive hours work. Means it's actually not productive, but out of work, this is there. Clear? So, if I ask you now in the answer, in the answer, what is the total productive hours? What is the answer? It is 9,300 and 26,875. If I ask you what is the total of work or spent, it is 11,160 and 32,250. Guys, come on, you tell me. Payment will be made for this hours or this hours. Spent. That is 11,160 and 32,250. Hope you guys are enough. Mark stop. Okay. If you want, you can also show here standard hours divided by efficiency ratio. Standard hours divided by efficiency ratio. That is what we have done. What do we get, sir? Actual hours worked. Actual hours worked, guys. For that, if you add that unproductive time, you will get total hours spent or per total hours paid. Okay. So total is how much, guys? 11,160 plus 32,250. Interesting calculation again. Hours to be paid at normal time. What is the total hours available? Guys, 4 weeks. 4 weeks are there. In each week, what is the working time? 40 hours. Given in the question. Given in the question. In how many workers are there? 180 workers. So what is the normal working time? 28,800 hours. But we have made the people to work for how many hours totally? Spent 43,410. So what is the overtime? Overtime is 14,610, guys. So total wages to be paid 28,000, that is normal time, into 25. Whereas for overtime 25 plus premium 50%, which comes to 37.5. 37.5. Or else you can alternatively take like this also, guys. What is the total answer? 43,410. Oh. 43,410 into 25. That is normal payment. Plus premium. Premium is for how many hours? Hours. 14,610 into 12.5. You will get same. You will get same, guys. So premium part I am showing separately. Normal wages I am showing separately. Is that clear? Yes. So these are our practical problems, guys. One last question is there. That is case scenario. Let us solve. That's all. That's all. We have come to the end. Control. Last few minutes. Case scenarios. M Limited is public sector undertaking. PSU produces a product A. The company is in process of preparing its revenue budget for the year 2024. The company has the following information which can be useful in preparing the budget. It has anticipated 12% growth in sales volume quantity from the year 2023 of to 4,20,000. Guys, add up. Here only we will calculate. Plus 12%. 4,74,000. 7,400. Oh, got it up. Nishan, control. Last 2 minutes. Otherwise, I will lose the control. Okay. Do you want me to lose the control? So last year it was 4,20,000, guys. Next year we are expecting 12% increase. So 4,70,400. The sale price of 23,000 per ton will increase by 10%, provided wholesale price index WPI increase by 5%. Okay. If conditional, if WPI increase by 5%, then selling price will increase by 10%. Okay. Let us see. We don't know the condition satisfied. To produce 1 ton of product A, 2.3 tons of raw materials are required. The raw material cost is 4,500 per ton. The price of raw material will increase by 10% if WPI increase by 5%. That is again wholesale price index. The projected increase in WPI for 2023 it should be. What is it? One kade 24, one kade 22, one kade 20. One second. Send the wholesale. Okay, I guess this is 24. It should be 24. Projected is for 24. So WPI is how much? 4%. That means this increase and all is ruled out as a yes. This increase is ruled out. This increase also is ruled out. Why? The WPI is within 5%. The WPI is within 5%. Both selling price also will not increase and material cost also will not go up, guys. A total of 6,000 employees work for the company. The company works 26 days in a month. 85% of the employees of the company are permanent and getting salary as per 5-year wage agreement. The earnings per man shift means an employee cost for a shift of 8 hours, maybe per day, is 3,000, excluding terminal benefits. Terminal means retirement benefits. The new wage agreement will be implemented from 1st July 2024 and it is expected that 15% increase in pay will be given. Please be careful, this increase is in between the year. Clear? Yes. 2024 is what we have to prepare next. Please be careful. Okay. Next, the casual employees, remaining 15% is casual workers, are getting a daily wage of 850. The wages is linked to consumer price index. The present CPI is 165.17 points and is expected to be 173.59 points in the year 2024. Okay. So we need to calculate this 850. Simple. 850 was when CPI was 165.17. Now CPI would be how much? 173.59. This would be the wage cost per day for casual workers. Okay. Power cost for the year 2021 is 42 lakh for 7 lakh units. 1 unit is equal to 1 kilowatt. 60% of the power is used for production purpose directly related to production volume and remaining are for employee quarters and administrative office. In simple they are telling 60% is variable which will vary with your production. Guys, this is again 2023 it should be. Not 2021. 2023. Make it. Inchara. Chalo. During the year 2023, the company has paid 60 lakh for safety and maintenance works. The amount will increase in proportion to the volume of production. However volume is increasing, same way. Okay, sir. Then, during the year 2023, the company has paid 1,20,000 for the purchase of diesel to be used in car, hired for administrative purpose. Okay, hired car, but you are taking care of diesel cost. The cost of diesel will increase by 15% in 2024. During the year 2023, the company has paid 6 lakh for car hire charges, rental, excluding fuel cost. In the year 2024, the company has decided to reimburse the diesel cost to the car rental company. Means they will incur, we will reimburse. We will reimburse. So how much should I consider? You can consider same 120 plus 15% increase also is there. 15% increase. Doing this will attract 5% GST or reverse charge mechanism. RCBL. RCM. Basis on which the company will not get GST input credit. Should we add it to the cost, Divya? Divya, are you here? Are you in line with the class? 5% should I add it to the cost or not? When credit is not available, you have to add it to the cost. Depreciation on fixed assets for the year 2023 is 80 crore 40 lakh and it will be 15% lower in 2024 minus 15%. You being an associate to the budget controller of the company is expected to answer the following question. Who are you, Ashit? Who are you? Ashit and huh? Budget officer and assistant to budget officer. Associate or assistant. Okay. What are they asked? We will see. What would be the sales volume for financial year 2024? We already done that. Where did we? 470, 400. Sir, see how fast it will be. One answer already got. What would be the quantity of raw material in financial year 2024? We will calculate all that. What would be the car hire charges for 2023? Already given, na? 2023 is the direct question. 6 lakh. Okay, this is also we have already got. In between, sometimes they will drop. Okay, this is for previous question. 6 lakh. For 2024, how much it will be? Including RCM, that is GST. Please be careful. What would be the budgeted profit or loss for the year? This would be the biggest challenge. Rest all is easy only. Yes. For calculating budgeted profit or loss, you have to do complete cost calculation. Fine. We'll go through quickly. Yes. Sure. First, revenue budget. Sales volume for 2020. Guys, the year confusion is there in the question. Please be careful. Actual data what is given is for 2023. What we are supposed to project is for 2024. In between 2021 and all they have used. Please be careful with it. Okay. Sales volume was 4,20,000 guys. Now it will increase by 12%. So it will go up to 470, 400. Selling price per ton, no change. WPI is within 5%, so no change. 23,000 rupees per ton. Sales volume. See, sales volume into selling price. I had told you one thing, you remember? Volume means what? Quantity. Clear up. Value means in rupees. Now they are following it. Same book, same institute, sometimes different ways of doing it. Clear? But you please be careful. Volume actually means quantity, guys. But when they ask you to calculate volume in the question, but you are not able to calculate quantity, understand it as rupees. That's sure. Sales volume. Guys, please be careful. If you multiply both of these, you will get, sir, but number is less, sir. They are converted in lakhs. They converted in lakhs. Means simple. 4 lakh 20 into 23,000. You will get rupees divided by 1 lakh. Because all the amounts they are converting for lakhs. Okay. Quantity of raw material guys. 2.3 tons for each unit of output. So what is output? 4020 into 2.3. 9 lakh 66. Same way here. 2.3 into 4 lakh 7400. You will get 10 lakh 81 920. Price per ton 4,500, 4,500. Is there any change in price of the raw material? No. WPI is within 5%. So no change. Now multiply both. You will get raw material cost. Again in lakhs. Again in lakhs. Multiply both. Divide it by 1 lakh. Wages and salary cost. Wages to casual employees. Quite important. Wages to casual employees. How many employees are there? 6,000. In that 15% is 85% is permanent. So 15% is casual. How much? 900. For 900 workers, how many days they will work in a month? 26 days. How many months in a year? 12. Per day, how much is the payment for them? 850. 850. Hope you guys got it. Per day 850. Please be careful. First calculate number of days they will work. 26 days per month into 12 months. Into how many workers are there? 900. Into rupees 850 per day. Rupees 850 per day, guys. Okay. Guys, this is important. Have they shown anywhere? Okay, better show you. How did we derive that? Sir, 850 was when? How much is that number? I had shown the calculation. 160 into 173.5. That is for 2024. 2024. This is how you are getting the wage rate per day for casual workers in 2024. In 2024. Are you getting the same, you check? 893.33. Yeah. Then multiply guys. 900 workers are working for 26 days in a month into how many months in a year? 12 months. Okay. Salary to permanent employees. 85% is permanent employees. So 6,000 into 85% comes to 5,100. This 5,100 workers will work for 26 days in a month into 12 months. Per day how much? 3,000. Please be careful. Man shift they told and 8 hours. So 8 hours is considered to be working hours per day. Clear? So it's that 3,000 is nothing but per day. Yes, sir. Now, guys, please be careful. From 1st July, they are changing something. So, 2024 they are told, not financial year, calendar year. So, how many months old payment? 6 months. How many months new payment? 6 months. Got it, now? April to June end, it is same old payment. How much, sir? 3,000. So, 5,100 workers into 26 into 6 months into 3,000. Whereas coming to the second half year, that is from 1st July to 31st December, guys. 5,100, same worker, work for 26 days a month into 6 months into 3,450. Sir, how did you get it? How much increase? 15%. 3,000 plus 15%. If you want to write it clearly there, 3,000 plus 15% from 1st July. That means for 6 months. That means for 6 months, guys. That is 1st July to 31st December. Please be careful. Don't follow financial year here. If it was financial year, they would have clearly mentioned. They have just told 2024, 2023. That means it is a calendar year. 6 months old payment, 6 months new payment, guys. Oh, total wages and salary we got it. Everything is in lakhs. Everything is in lakhs. Power cost for production. Guys, what is the product for production? 60% they told. So 7 lakh is for 2023 into 60%. Okay. Remaining 40% is for employees, which I assume it to be same, fixed. Whereas 420 was for how many units, guys? 4,20,000. Now how much? 470, 400. Directly same amount. Clear? 112% they have taken, which is 12% increase. You can do like this. 420 is for 420. How much for 470, 400? Or else you know production has increased by 12%. Same thing you can do. Plus 12%. Oh, this is considered to be same. This is considered to be same. That is for employee partners. Fixed. Okay, sir. Total power here. Then power rate per unit. This is power consumption still. Power consumption still. Power rate per unit, guys. Cost is 42 lakh for last year. For how many units? 7 lakh units. So per unit how much? 6 rupees. Now multiply. Units into rate per unit. Units into rate per unit. Guys, please be careful. These are units. So now we are come to rupees. So 42 lakh and 45.024. Everything in lakhs. All the rupees are presented in lakhs, guys. Safety and maintenance they told 60 and it will increase as per the production. How much production has increased by? 12%. So 60 into 112 you can. 60 into 112. Why they have done 420 into 112? I don't know. It should be 60 into 112%. Clear? Or else you do like this. 60 lakh divided by 420 into 474. Clear? Actually, here 420 should not come. It is 60 into 112%. Diesel cost 1.2, 1,20,000. Take it. Sir, here nothing because they have taken it later. Car hire charges, guys. 6 lakh, 6 lakh. Fuel reimbursement. Guys, listen. This 1.2. Now, we are not incurring. They will incur, I will reimburse it. How much? 15% increase also is there. 15% increase also is there. So 1.2 into 115% or just plus 15%. Just plus 15%. Yes, sir. Plus GST is a gift by made up. So you are now liable. You are a recipient. You are a recipient and RCM is applicable. They are only telling, sir, why RCM? Don't worry. That you have already learnt in GST. RCM is applicable, no credit. That means should be added to the cost? Yes, sir. So on what about guys? 6 plus 1.38. 7.38 into 5%. 0.369. Guys, if credit is available, don't add this. As credit is not available, you have to add. You can write there, no credit. No credit, ends added. No credit, ends added. Total car hire charges. Previously it was only 6, but now 7.749. Okay, sir. Depreciation. Okay, but please be careful, guys. This has come to the other side. Because of that, also cost has gone. Please be careful. Depreciation was 8,040 here, whereas here 15% less. 15% less. That is 85%. 6834. So we got total cost. total cost deducted from sales. Sales is somewhere on the top. So sales minus cost will give you profit or loss. Both loss only. Both loss. Very good performance. Chalo, what was the questions? First 470, 400, I guess we have answered. Even this 6 lakh we had answered. What is the second question? What they have asked? Quantity of raw material. Okay. Quantity of raw material. 10 lakh 81 920. That is in 2024. Yes, sir. Then fourth one, higher charges in 2024. Uh, into 1 lakh into 1 lakh. Huh? That we have done. No? I have told already. This we have anyway. Copy paste of question only. It is already given in the question. Yeah. 774 900. Please be careful. It is calculated in lakhs. You will convert again into rupees into 1 lakh. Then the last one is profit or loss. Loss. But 2024, right? 1273.043. Here they are given in lakhs. One thing, one time. Fine. See, this is the only question which may take so much time for you. Guys, assume, sir, this question I don't have so much time. Still, you can do. It is not a choice to read the entire question. Clear? Just by reading the question only, we answer to 2 3 things. Clear? Others may be small calculation. For example, this is one small calculation. We can do it. Even actually, just by seeing question that car IF channels thing, you can do it. You need not do all this. There itself, take the respective cost, add 30%. That's all. Only thing which will take too much time here, time consumption is last one. Clear? Because what happens now, students when they see such a long questions and all, when they have 5 10 minutes, they think, this cannot be done. Let me go on. Correct. Don't commit such mistakes. Whatever is possible, guys, sit till 5 o'clock in your seat tight. Even if evaluator is pushing you till 5, obviously they will not push you. Only then you go by handing over your paper. Don't take that also. Huh? Yeah. Result with it. Chalo. So please be careful. Use every minute in the exam hall, guys, which is very important because see some questions within seconds you can answer. This types of one. So 1 marks extra if it can add. It is great. One, see guys, just imagine 2 marks extra in 6 subjects, 12 marks. That 12 marks has a too much importance, very much. Okay, even 6 marks you consider. It has a lot of value. 1 marks, one per subject. So please take it seriously. Guys, we have discussed different kinds of questions. All the ICM material questions we have discussed on all the chapters. Plus whatever we have discussed in the class. Question bank. Question banks has 2 questions. One set of questions is whatever I have made you guys solve, and second set of question is from past question papers. Everything we have done. Now you are completely ready as an output. Clear. But please make sure that you guys keep practicing it. As on today, to some level, okay. But sir, is it enough straight away? Can I go to the exam and write it? No is my answer. So please practice it, guys. Stay in touch with the subject. Any subject, not only my subject. I am not jealous that you have to get only this much in my paper, others okay. Every paper is important. So please stay in touch with the subjects, and also any notification, any information about the course also please be aware. In costing, I already told you guys there won't be any amendment, nothing. And don't give so much importance to what is important, what is not important, and all. Everything is important in my opinion. Clear. And what is important if you ask me, whatever we will be solving from past exam question papers and whatever we would have solved in ICM material, some important questions, tricky questions, those are important. Clear. But 100% syllabus coverage is a key, guys. Please do it for any subject. And for any updates and all, see even in my Telegram channel or WhatsApp channel, anything important I would be posting it. No rumors at all. For sure. So, for example, any changes or any exam dates or exam registration and all, some students miss out that also. You should be very much aware of that. Before exams, you have to register for exam. Sir, I am registered for the course. Is it enough? No. Exam registration is different. Course registration is different, guys. So just few months or few days before the exam registration portal will be opened. Please register. So all this, some students may not be aware. Clear. So it is always good to join Okay, nothing, and your identity will be fully protected. No one will know your identity. Sir, what if my friend or someone else take my number and chat? No, I have kept it in such a way that the persons will not know who is there in the group, and it's only one-way communication where any update I would be putting. And also, in coming days, if any additional videos possible, I will be making it, for example, for your respective attempt RTP discussion. Or maybe by the time you write the exams, another one or two exams would have happened. I would have discussed the question paper on those attempts. So anything extra if possible, I will also provide that. So anything related to the course or the subject, I will be updating in my Telegram channel or WhatsApp channel, guys. So please make sure that whatever is told in the class, take it seriously, work on it, guys. It's your life, your career, and it's in your hand and in no one else's hands. With this, I will wish you all good luck.